you can actually plan your cash flow even with insurance delays. So let me show you how. When you're running an insurance-based business, AR can feel really unpredictable, but if you track the numbers, then you can forecast and budget with some confidence. My name is Nailea and I'm your fractional CFO. My firm is Sunflower Financials and we focus on helping service-based businesses, particularly ones that have insurance as one of their sources of income. And if you've seen this entire series and you are interested in possibly working with myself and my team, then go ahead and click on the link below and let's have a conversation and see if we're a good fit. Let's get into forecasting. How do we do this? We're going to first forecast AR, accounts receivable, by payer, client, or service. So you're going to break down AR by what's outstanding. What's outstanding for Blue Cross Blue Shield, for Aetna, for Medicare, for whatever the provider is. You're going to look at the average days to pay for each payer. So for example, Blue Cross Blue Shield pays in 21 days, but Aetna pays in 45 days. This tells you when the cash is likely to hit. It's going to be really important for you to set targets because we already talked about that you have one person doing this or you have a team of people doing this that are focused. So everyone needs to have a KPI or a target in your business, right? Every single person should have one or two numbers that they focus on and they know are their goals in your business. And for your AR person, maybe their target is like reduce days outstanding from 45 to 30 within 90 days. So for example, you're sitting on $200,000 of accounts receivable and your average collection time is 60 days. That means that you have 2 months of revenue that's sitting unpaid. So if you drop that by 30 days, that frees up $100,000 of cash flow. That's a significant savings for your business. So let's not just look at revenue that's been booked versus your expenses, right? Because that's not a true account of how much money you have to pay your bills. You want to look at your revenue that's been collected versus your expenses. So if you know you have $80,000 that's likely to be collected in the next 30 days, you want to plan your payroll, your rent, and your vendor payments against that, not the 120 maybe that you billed. But Nailea, I have to pay payroll every 2 weeks. That's not an option. Yes, you're right. So if you follow the systematized methods that I gave you in my last video, then hopefully all of the cash is coming in when it should. And then you can put your expenses and your bills towards that and maybe avoid going to a line of credit or some lender to fill that gap. We want to try to manage our timing to fill that gap and avoid the external lenders. And finally, with AR forecasting and budgeting, you want to track the right KPIs, key performance indicators. And this collections person is in charge of these. So they're going to tell you what the days sales outstanding, DSO, how long it takes to collect the payments, and the goal is under 30 days. Your percentage over 90, anything from 15 to 20% is a red flag. And 30% or more is a big red flag. So you want to revamp and start from the beginning on the video series and just go from scratch. And the collection rate by payer. So compare billed versus collected. If one payer consistently short pays you, to adjust your contracts or follow up harder on that payer. And so the bottom line is that when you forecast AR the right way, then you stop living in reactive mode and you start running your business with predictable cash flow. Even with insurance delays, you can plan ahead with confidence. There are lots of software out there that actually can keep track of by provider what their days outstanding is already. So these reports, you don't have to come up with them from scratch. Really, they probably already exist in whatever tools you're using to manage your invoicing. All right, my friends, if this was helpful to you, if this whole series was helpful, please let me know in the comments what you learned, else you want to talk about on the channel. And I am so excited to talk about and resolve more CFO level work with you, my CEOs, next time. Thanks.